BitShop, the first fully privatized on-chain auction house, introducing new ways to generate liquidity for Web3 assets, backed by KuCoin Labs and Republic Capital. Bid small, win big at BitShop.io.
Good afternoon, everyone. BC Richfield here, coming to you live from London. It's just gone a couple of minutes past midday, making it 1100 UTC, or just gone. Big shout out to everybody joining the stream live today. See a lot of familiar, friendly faces and some new people in the chat as well. So a few good mornings. Nick, Craig, hello. Kelly, our friend all the way from New Zealand. Whack, great to see you on here as well. Yakuza Kana, our lovely Brawl, and Hans, I hope you had a good holiday, my friend. So we've got loads of people waiting for this one today, which is really cool. Obviously, for those of you that don't know, Wednesday, we typically focus on our altcoin pairs. GOT, hey buddy, good to see you in there as well. And Peter Hall, good evening. Today we're going to really focus on just ripping through some altcoin pairs. Yeah. So one of the things I really want to do today is kind of try and separate more of the education side of it, which happens on a Monday for today. However, I definitely don't want to discourage people from asking questions, all right? James 14, good morning from Texas. Awesome, man. And Carstan, what does BC mean? Oh, it's really tricky. I don't know if I should tell you or not, but no. It's probably showing my age here a little bit, but there used to be an old show on Disney called The Dinosaurs. Grey Coin, good morning. And it was like an animatronic one. The guys used to get in these suits, and it's one of the shows that I grew up with, and in it, there is a sort of like an angry boss Triceratops, a bit of a corporate raider called BP Richfield. So really when I a fair while after I started out in this game, but when I kind of transitioned into Twitter and more into crypto and doing live shows, that used to be my logo, right? But obviously Disney aren't particularly keen on people using their stuff. So a very good friend of mine and a fellow Bird Nest member, QBS, designed the Triceratops logo you see on here and the one that you see on Twitter. And I thought I'd better change it from BP. So it was a really kind of semi-crass attempt to change it from BP Richfield to BC with a kind of little bit of a play on Bitcoin. So I apologize if it wasn't as exciting as you thought it was. But if anybody does know that, show, it is a really, really good show and still makes me laugh today. And it's one of those things as you get older, like myself, and I'm not old, but approaching my 40s a lot more than my 30s, which is old for the crypto industry, right? But looking back on it now, you realize how many kind of home truths are in shows like that. But hopefully that answers your question, Carsten. But it's good to have you on the show. Ricky, great to see you, buddy. Alexandra, Nitpart, every day is a school day. It is for all of us, mate. Always learning, always learning. So let's jot down a few of these just before we forget. Of course. So Doge, that should be an interesting one to look at as well. ETH and DOT as well. Awesome. Not the mummer. Yes, Moral Crawford. Absolutely spot on with that one. Whippersnapper. Thanks, Greycoin. You can come again, mate. Super Shogun. Hello, mate. Also, welcome, Moral. It's on Disney at the moment here in New Zealand. That is amazing. So back in the day, before we had the Disney, well before we had the Disney Channel, and even Sky was in its infancy, DVDs had just kind of come out and you couldn't get it anywhere. And I had some legend on eBay had copied them or recorded them off the TV and saved them to DVD. And I remember just how much I used to cherish those basically until they'd worn out. Of course, Hans. Let's take a look at copper. I don't really look at commodities, actually, not the way I trade or metals and bits and pieces, occasionally a bit of gold. So you ping me through the ticker for that when you get a chance, mate. We'll definitely take a look. YouTube user. Awesome to have you back, mate. What an absolute treat. Okay, so as we go normally, let me just ping this on full screen for everyone and we'll take a very, very quick look. A couple of things I just wanted to touch upon. Now, I know the correlation between Bitcoin or crypto in general has kind of been a little bit waylaid against DXY, but I do want to cover the DXY chart very quickly. I'm going to give you just really, really, really quick thoughts on Bitcoin as well, just to start. These are our weekly levels that we've got here. Now, for me, the draw on liquidities, we've got this fair value gap above and these below. Right now, for me, the ones below, as I've said consistently for the last few weeks, are the real draw for me. because we've got this big inefficiency down here. Now, one thing I don't really like about this at the moment is the fact that you see this big thick red line. Let me just zoom in a little bit. Just look at the rejections we're getting here, right? Now, this could be setting up for something very, very sneaky on the lower time frames though, right? So just very quickly, let's just take a look at that. I think let's take a look, let's get our daily levels on. Right, and we can see just quickly, I won't overlay, but we've got daily levels here, we've got daily fair value gaps overlaying the weekly ones here as well. But I just want to drop us down to the 4 hour very quickly and kind of the range that we've been looking at now for a little while. And we can see we're kind of just popping out the end of it here, but I haven't really updated this as much because I know we're not really planning to cover this in a lot of detail today, but I did just want to add this in because just pop these off for clarity. What I just wanted to show is how price has now kind of worked its way down. We've taken out the mother bar low, right? So the idea was we've had this deviation above the range high. We've come back within the range now. Our theory is that we purge down to the midline. If we lose the midline, which is around here, as we can see price being held, being suppressed under there. Let me just draw that in for you just so you can see what I'm talking about. All right, I know this is a premium discount range, but look, this is the midline, right, where it separates from red to green. We can see what happened. Price got under the midline. Look how we got this resistance. That's one of the reasons when we came into this 4 hour fair value gap here that we were looking for shorts here and then continuation shorts here, right? We've ultimately run the mother bar low now. So if our expectations for higher prices, this should be our deviation below the low. We've now also stepped back within. Let me just extend this line out so you guys can see it clearer. Now step back within the inside bar. So this is a really interesting one, right? Because we've had the deviation, we've stepped back within the inside bar range now as well. So by the theories or our theories of range trading, right, then we should be looking for expansion here higher. What I do like about this, right, is what I didn't like at first is the fact we've had this range, we've had this big deviation, right? So you're almost looking like a power of three where we've had this big consolidation, right? So consolidation in here. Just do that in orange for the sake of making it a different color. Then the concern here was this, the deviation, right? And if that's the case, then are we looking at this to be the distribution down? We see we had that fast move. I expected a reaction at the mother bar low, but the fact we've climbed back inside the inside bar is quite an interesting thing. So here, I'm going to be closely monitoring this because I think if we show weakness here and step back outside again, then we are finally going to get that deeper correction back down to here. However, what's really worth noting is just the liquidity that was stacked under here. We swept this low here, right, and didn't get that much of a reaction. When we swept this one, which is the formation of our lower part of the range, and we noticed that we hadn't swept that before, we've seen a slightly stronger reaction. So for me, if we're going to show any strength here, we need to build upon this. And a way that we can look at that is by saying, okay, if we mark out this high, yeah, if price makes a strong move above this, comes back down to retest it, be looking on the lower time frames for market structure, yeah, and then we'd be looking for breakouts very, very similar to that. So that's where I'm with Bitcoin at the moment. I'm actually fairly neutral on it. But it was just to kind of share those thoughts very quickly. The next thing I want to do before we move on to the alts is also just have a look at the dollar index. All right, so let's just wait for this to load up a second. Here we go. So if we're looking at this on the 4 hour, which we've got here, I've been quite vocal about this on Twitter recently because if we zoom out to our daily first, actually, and give you some context on this. So those of you that remember, we have been heavily short on the DXY since the rejection here, right? Had this level here and we've literally come down, retested it, strong rejection, cleaned out those lows, back down to our key support level here, which we absolutely tore through. This is going back to a weekly consolidation. So this is, well, a consolidation that led to the big expansion, but is also a weekly order block, right? So for me, that's kind of where my eyes are turning next. Let me just show you here. We've left these equal lows below. I can't really see much confidence as to why we've stopped here. I know, we've got kind of like a higher time frame support resistance level here, but actually this daily fair value gap, here we go. So Nick, would the dip into the fair value gap weekly count? It just touches it. Not sure if it would return lower. Sure. I mean, one of the really good ways to look at fair value gaps is for that initial reaction, right? You want to see that either strong initial reaction, like it dips its toe in, has a big reaction, or it kind of comes into it to a point, finds that little bit of support, and then has that displacement that we're always talking about, right? That kind of aggressive reaction, right? Now we can see here, this is the daily fair value gap, right? And why we were short here. So let's look what happened. The fair value gap was valid from the close of this candle. The expectation was for price to draw into this candle and then develop further downside. Okay. Now, when I'm saying when we need to look for a reaction, depending on the time frame you're trading, one of the things I like to do is take the larger time frame fair value gap, like we've got here on the daily, and then find the lower time frame fair value gaps that live within it. So we can see that we have this one here on the 4 hour, right? Now we can see that we made mincemeat of that on the 4 hour. We've now got a thinner one sitting up here, right? Which will draw in as well. So you see, by adding these in, the lower time frame ones into the higher time frame fair value gap, it allows you to kind of more specifically target key areas rather than kind of having this huge area with price drawing up into and then breaking down. And then what we say is, if we flip a fair value gap, so this bearish fair value gap here, well, we've now closed above that, right, on a 4 hour scale, and we're moving higher as well, right? So for me, what I then do is I mark this purple to show me that it's now an inverse fair value gap, meaning that if we're expecting continuation higher, I wouldn't want to see this run first. But if we didn't run that fair value gap, I'd be looking for this to get support and then for us to head to this one, possibly higher, maybe into this order block here. Yeah, so this was the last up candle here. Price ran this and then had an aggressive move lower. If we did run into this first, I'd be looking for strong rejections on the lower time frames, because it's important for me to always remind myself that even though I've got a 4 hour fair value gap there, or as I decant them and move even lower, I don't want that to control my bias, right? I don't want that to control my bias, because if I allow the lower time frames to control my bias, then it means that I've lost my view on the higher time frame. So on the higher time frame, yeah, if we were looking at this, now if I'm expecting lower prices, this would be the most aggressive place that I would expect them from, right? Because if we look at our dealing range, yeah, when we're talking again about premium and discount, yeah, then if I'm looking at this from a risk aspect, then I'd actually want to see price draw higher up into these. I'm not saying we're going to get that. And actually, when we look at these, like sometimes you don't, right? But just to give you an example, when you look at this leg here, might even extend it right across to here actually until we lose it. Let's just reverse this, right? So the principle's the same here. We've taken out a low down here, right? Just swept that. We've now expanded higher. Now price broke structure here, yeah? So from here, when we're up in this half of the range, we're favouring shorts. When we're in this lower half of the range, we're favouring longs. What we can see here is we had a nice kind of 1-2 really good short days. Then we had a series of long days in here. Then we've come up into here. This little deviation of the level gave us a short back lower. Then long here up to this level into this order block. Rejection. We then held this level, meaning that we were just favouring short players from here. All right. That's the very basic principle of how premium discount ranges work. I'd always recommend going to the source to kind of overlay that information yourself. And that source is ICT. You can find lots of stuff on there. I know he's got a new mentorship program. I was part of the old one. He was the new one's the 2022 mentorship, I think. But very much the same principles that he would teach years ago, right? And the idea for this is looking at the dealing ranges that we have. So you're looking at it from a risk to reward perspective. And what you're doing is you're taking a price leg. Ideally, what you want to see is something that runs liquidity from the low to the high. Yeah, and then I like to confirm it with a breakdown around here, all right? And then what it does is it helps you pick positions where the risk to rewards on your side, where you're expecting, the favoritism to be short or to be long. Anyway, before I kind of digress too much, the next thing that I would be doing is looking for price to move higher, right? So we then have this daily fair value gap above and one up here. So an ideal situation for this for me, just in terms from a trading perspective, is if price works its way up into this, we get back above this support resistance level. I think there's a high probability then that people start to get heavily long here. Not that I don't trade the DXY personally, but basically if the DXY is running hot, you would be short DXY pairs, yeah? So if the dollar's showing a lot of strength, then you can be short the euro versus the dollar, short cable, British pound versus the dollar, etc., right? But the other thing that I like about this is the idea of the damage that it causes. Because what you do is you come down from here, people expect a bit of a rejection here, we show some strength, start to work our way up, people start to get very long here, expecting higher prices, creates a big liquidity pocket. The big accounts, major players, however you want to think of them, institutions, smart money, as ICC would call them, they get their reversals here, right? Because they can fill a lot of positions. If the whole world is starting to go long here and they can flip this down, then they've got everything they need. Hey, Peace Sniper, good to see you, buddy. How are you doing? 183 would be a nice and clean. Okay, 100 and around about here. Nice running into this kind of price swing low around here, probably just tweak into the discount into premium as well, which would favour shorts. But that's something that we want to have an eye on, right? Especially if you're looking at any traditional market assets like FX. So with the dollar showing a lot of strength there, that's where we need to be cautious. The other thing that you can do with these is if there's an expectation for price to move higher. So, for example, when we came into this, right, the 4-hour fair value gap here, then we can see that we've got this 15-minute fair value gap here. That's closed on the close of this candle. What does price do? Dips into this. We don't change the theory, right? Price has now dipped into this. So we say to ourselves, okay, well, if price is holding here, which we can see that it can, yeah, then if we drop down to an even lower time frame here, bro, can you look at Coinbase stock? Oh, yeah, sure. Cool. Guys, with Coinbase or with Copper, I don't really trade stocks, but I'll trade any chart. But if you can find the ticker for me, that would be great. So when we drop down to a lower time frame here, we can monitor to see how price is respecting this. Now, if our theory is that we want lower prices here on the higher time frame, then what we would have wanted to see from price here was this move higher, a move back down here into the fair value gap, and then we would have wanted to see this respected, right? And that can give us a trigger to know, okay, showing weakness here, right? It's failing to get above, it's failing to hold the fair value gap, which means it's showing weakness. If that then plugs in with our higher time frame theory, it gives us something to execute. Now, again, I'm not saying that you would necessarily trade the DXY. I don't. I use it as an indicator to tell me what risk is doing in the markets, or for FX pairs. However, if this was a chart and it would trade the same, if this fair value gap showing strength here, then you can look to go long, right? And there's no real secret here that if you were long in here, then you'd be targeting these highs, right? So we can see it's just tagged that. So for me now, what I'm watching for is, do we get a strong rejection here? Price loses the 4-hour fair value gap, which we've now inverted. So we're expecting this to act as support. If we knife through both of these now, for me, that's a really big sign of weakness. And if we see weakness in the dollar, then we very, very often see strength in risk assets, all right? Coin, well done, Nick. You superstar. Should have known that, shouldn't I, after the whole debacle around the stock? Perfect. Peace Sniper. Thank you, mate. Thank you. Really do appreciate you guys joining. So that's just my little bit of a ramble. I've managed to keep that. I normally rant on for about 30 minutes, but we've now got a solid 45 minutes here to really rip through some of these. So let's take a look at which ones we're going to cover. We're going to look at Doge, ETH, Copper, and then Coinbase, which is Coin. Rove. Sorry, mate. I've just seen that you popped them in there as well. I'll pick one of those out. Do you have a particular favourite? And we'll try and sneak that in at the end as well. If you do, let me know which of those you'd like to take a look at, mate, and I'll have a good look through at the end as well. Perfect. Okay, so let's start with Doge, shall we? the everybody's favorite, or certainly the king of the meme coins, and it certainly was for a while, although there's been a lot more kind of popping off since. Let's have a look. So starting on the daily here, guys, and what we're going to do is we're going to do daily, and we're going to rip through these really, really quickly. This is just purely to give you my thoughts on where we are. So we're going to really, really focus on recency, which is what I do in terms of being a day trader, but it doesn't mean that there's any difference with that. If you're a swing trader, right, position traders obviously will need to look on slightly higher time frames as well. So what am I looking for here? First of all, when we're in a downtrend, I'm looking for price to do a couple of different things, just to give this some context. Same way as when we're in an uptrend, right? So when we're in an uptrend, I'm looking for price to run a key level, yeah? Then I'm looking ideally for an inversion of a fair value gap, which I would look for typically on a lower time frame, but the daily really does give this. Basically, the question for me is, are our bullish daily fair value gaps and order blocks supporting price? And if they're not, then we look for the bearish opposites to then short. So for an example here, yeah, we can see the price runs up, takes out this high. We get this fair value gap left here. Price doesn't respect it because it comes back below it, but we do hold this bullish order block, right? There's been no break in market structure. So here, I would still be saying, okay, because we've run this high, I'm cautious, but I'm still favoring longs because we're holding this daily bullish order block, okay? Now, when we draw up into here, right, pop out just a little bit here, but come back within, then all of a sudden we're saying to ourselves, okay, this here, yeah, has been closed above, meaning that we would be favoring that as bullish. However, we've just run this higher, so we would want to see this hold and then price structure build above. What we actually see is price drives away. So remember what I said, if we're not holding a bullish fair value gap or a bullish order block, yeah, and prices return back into this, we can see that it's now popped out the bottom of the order block here. Then what are we looking for? We're looking for bearish order blocks, right? And we want to trade with the trend. So here we have our bearish order block. Let me just draw that in properly. We can see it suppressing price. So anytime we come up and we engage with that, we're looking for lower prices, all right? Just to give you guys a very quick bit of context. So when we now do the same on here, we're looking for the same for price to have found a bottom. That's either temporary or it could be more long-term, right? Now, this is a really, really good example actually of something that I was discussing the other day with a couple of students, which is if this is the level we're looking to run, see how price gets really, really close to it here, but doesn't quite run it. And it doesn't have to always run it, right? But the mistake here for me would be expecting this to be the reversal, because you could say, look, we've taken out liquidity below these lows. We've had a really strong reaction. Right, I'm going to get bullish. No. And why no? Because at the moment, we're still holding bearish fair value gaps, right? Now, this is really, really tight, this one here, right? But we can see if I line that up perfectly, the high on this one was 0.07196. 0.07197. It tweaked it by 1 point, right, into that. But that's enough for us to know that this is holding and then look for short trades in here. So then while we're looking for that, we see this level gets that, and look at the reaction. When this level does get run, how aggressive that reaction is, how much of that gets bought up, right? That's big players stepping in to buy those, and that's because they've got set levels down lower that they're looking for. So what do we want to look for here? With such a large fair value gap here, I'd be a lot more tempted to drop down to lower time frames, right? To start looking to see, okay, on the 4 hour, have we developed anything here? But this has to remain our key focus, right? So our theory is that if price is driving up into this, when we come into this here, we're looking for short trades, right? And actually, we can see here whether we've got the entry triggers or not, and this is the one I'm talking about, because this is the first one that really steps into the fair value gap. We would then look for the fair value gap on the lower time frames, and then what we're targeting is this low, yeah? Or a lower low, so like this swing low. But this is the first one that would make our target, right? Price comes into here, we look on the lower time frames for our short setups. This one would have worked out quite nicely. We ran this low here, And we can see whenever we have a sweep like this, there's not whenever, but often when we have a sweep like this, we see a reaction. Price then steps back into this, the fair value gap. What are we then looking for? Well, a close above. We get a close above here. Fine, I know we're into this order block, but that's a pretty strong close. Like I said, you'd want to see a strong reaction, like we did when we dipped into this and we had that big reaction up. Price comes into here. So we're now saying, okay, well, if we've now violated the bearish fair value gap, then we've got this bullish fair value gap below. Price dips into it here. We're looking for our long setups. Ultimately, price comes up to here, gets to about here, fails and runs down the bottom again. So you say, okay, we've got the close below. Are we holding the order block in here, the down candle that led to the move higher? So we're holding the OB, right? So when we get down to here, we can say, okay, let's see if we get long trigger setups, all right? So you can pop that on there. Well, actually, I won't go too deep into analysis, or we'll never get through the rest of the charts. But in terms of how we would play this in terms of triggers, I've covered them on some of the previous live streams as well, but we'll happily do it again. So do let me know on Monday if you want to cover that. But I don't want to kind of go over the same material we covered Monday and before, because a lot of the people on the stream are obviously, very, very well aware of that. But basically, we move to a lower time frame, look for our kind of breakout pattern, which I'll draw very quickly here. If we were looking for that, you'd have the level here. You want to see price run that level, come back above. Structure, then the break of that. We look for an inefficiency in here, like a fair value gap. So we want to see a move higher. We want to see a move with displacement that breaks market structure. Then we want to see a retest of that level, and we can then look to go long within there. All right. But do let me know. I also did promise a while ago, which completely got too busy for, and I do apologize, to do a thread on triggers as well, which actually I'm just going to write down on my list here to make sure that I make that. Perfect. So with all of that said, and me squiggling all over the charts, let's take a look at where we are now, right? So this fair value gap here actually tells us quite a lot. This was a very, very prominent FVG, okay? So as we can see here, as price came back up, we then held this, we came back within it, we then dropped out of it, held the order block in here, and then we found bullish continuation, right? So let's focus on recency, because these things have all played out. There's a couple of things that I really like to see. Like I said to you about inverse fair value gaps, a very, very skinny one here, but there is one. So an inverse fair value gap is a bearish FVG, meaning that when price returned here, we'd be looking for shorts if we had a bearish high time frame bias, but we don't. We rip through it, right? So then what are we looking for? We're looking for continuation to the high, right? So then when we sweep the high, what are we? Well, we've swept the high, we've got this bullish fair value gap, and we're now in a bullish structure, right? High, higher low, higher high. So we don't want to mess with it. We just want to say to ourselves, okay, as long as we're holding this, when price dips down into this, we're looking for longs, Ali, really, really good question then. And I'll go back through your questions in a minute. I know I've missed quite a few in the chats, guys. How do you trade this with so many wicks? I often get stopped out. A really, really good question. So for me, if I was trading this on a daily time frame, then I wouldn't be looking for this setup any earlier than this point here, right? Because at the moment we're still bearish here. We've set this high, but for all we know, that could just be a lower high, and price could be purging out the bottom. So what we're then looking for are for our bullish order blocks, right? Which is this. So for the order blocks and the fair value gaps to hold. But for me, I'm then looking for this move here. Now, you'll often hear me say, I want to see a sweep, right? Which is a sweep of that level there. That means that we've forced the market down there and taken people's stop losses out. It's what so many people get trapped in, right? So catches people offside there. So people that have gone short late, what happens? Then the people that were long down here, buy orders, their stop losses, sell orders, right? People that were late to go long, their stop losses below here, price gets moved down to here to generate that liquidity or to take the liquidity that's already there. Then we break structure. Lower low, lower high. Higher low, this sets a higher high. So then I'm looking for price to return to this fair value gap, right? So for me, if I was long here, my long setup on a daily frame would be this. So when we set that fair value gap on the close of this candle here, Ali, then what I'd be doing is looking for price to move back into here where I'd have my limit order set. I would place my stop below the prior swing low, which is this, always a few pips below. And then I'm targeting a nice clean high or just a little bit underneath it, like the body of these candles, right? And then I ideally want to see at least a 1.5R. We can see we just tweaked out of this because I think we probably came up to almost take this. No, we've left that high, which actually gives me a lot of encouragement because this swing higher here is what price could be coming back for now. All right. So that's how I'd look at it on a daily scale. If you try and get into these things too early without confluence, quite often you can find yourself part of a stop hunt. And it's so frustrating because you see price come and take your stop loss and then go exactly where you expected it to go. All right. So that can be quite helpful sometimes if you wait for the confirmation. But that's 8% loss if it hits stop loss. And if you had some leverage, you just get wrecked. Well, yeah, but that's down to risk management, right? So an 8% stop loss really is irrelevant. You want to be setting your risk parameters based on your position size, right? So that's why we've got this amazing calculator from my dear friend Razoon, who's part of the Nest. Bit of a plug for you guys, but if you do have any interest in signing up for the Nest, you can get deals on there at the moment. You can get this calculator for free, I think, just by signing up for like a month with Bybit, which costs very, very little. It's just your deposit. So if I'm long here, yeah, with my stop loss here, a few pips below, and my target is here, like I said, the body of these candles, what you'll notice in this little box down here, which you might not be able to see, so let me just click this here and show you the inputs. This is based on a $1,000 account. Now my risk is 2%, right? So what does that mean? And my leverage is 10. Now, leverage only affects your positions as your margin for your position size, right? Meaning that on here, when we look at our little box, I need a position size of $237. Yeah, that's if I want to cap my risk, my 1R loss at $20. Yeah, so I mean, no risk at all of blowing my account because I'm managing the risk. Now, there's some really, really good risk videos out there, and I know we've got some really good ones at the Nest as well. But it's a really good question, Ali, and something that a lot of people struggle with. So tools like this can be really, really helpful because a lot of people get confused with leverage here. If you massively over leverage your account, you can blow anything, right? But here, notice the difference. When I've got 10x leverage, the difference is just between my margin and my position size because I'm borrowing the leverage off of the exchange, right? So $237 position size means that the margin I need to cover it is only 23.71, right? Now, if I put the leverage down to 1, yeah, you'll notice those numbers are the same, both 237.13. Because it's a large percentage size, yeah, you don't need as much position size. Now, day trading, which is what I do a lot of, then you often need really, really big position sizes if you want your risk to be the same, right? So understanding margin and position size are really, really key. Let me just get that off the chart. So, perfect. So at the moment, what am I looking at here on Doge? So we're holding this, right? So bullish fair value gap here. We've taken out this high here, which is fine, but actually we can see as we do that, we kind of still looks to me like we're reaching for this high here. Now, we're bullish on a daily time frame, right? So I'm going to be bullish on a 4-hour time frame, but I need to apply the same parameters, yeah? So I'm going to run through this one in terms of my thought process, guys, but then after this, we're just going to rip through those charts using the same things, all right? So, excuse me. If we're looking at this now, let's just move back to here very quickly. We ran this higher. Now, we always have an expectation of a reaction when we run a clean high or low because we know, or there's an assumption that there's stops there, meaning that they can be targeted. Now, what we see here is price comes up, runs it, pulls back a little bit, yeah? Comes up, runs it again. Excuse me. Ultimately, swing failing this higher, swing failure pattern, we set the swing higher, come back down. Look like we're going to come above it because we run it, but ultimately break down, right? Now, context is everything. Now, remember I said to you about premium discount. So we're looking from the run from this leg here up to here. Why? Because we've broken market structure here, right? So while we're here, what are we looking for? Well, we're bullish on the daily time frame, right? So nothing changes that on our 4 hour. We're just patient on the 4 hour. We can do counter trend trades, but it's something I'm not going to encourage on here. It's something that obviously I can teach you what to do. You reduce your position size, but really I want to focus on the high probability trade setups, which is exactly how I trade. So everything we've done so far is repeatable across the time frames, right? So we have a rejection here. So what we're saying is, rather than saying, quick, let's scramble and find a way to get into shorts, yeah? So people targeting and looking around and thinking, where are we going to retrace it? Nobody knows, right? This could have held this fair value gap here, right? Could have held this one down here. So what we can do, right, is we make an allowance because our bullish daily preference is in place. And all we're doing is patiently waiting here. And patience is something you'll hear the very best traders, not including myself in that, but the very best traders. Someone like SC, for example, preaches it a lot, and he's probably the cream of the crop, right? Now, remember what we said about the premium discount range. If we're going to employ this, then we're looking for price to retrace here. We have two ready-made fair value gaps here. Do we know which one we're going to get a reaction from? Absolutely not, right? I'm just going to pop the session breaks on for a minute to just show you this on a lower time frame, right? But what we do know is when price gets to here, yeah? So let's remember, when this is on a lower time frame, it's this fair value gap here, which actually we'll do in green so it stands out because we're expecting it to be bullish. So all we're doing when it gets here or here are looking for bullish reactions on a lower time frame. So let me show you what that looks like. So see how we've kind of planned all of this out on a higher time frame. So now when we get to the lower time frames, we're not stressing and thinking, God, what the heck is price going to do, right? We're just actually looking at this and saying, okay, well, if we're looking for a bullish reaction here, we can now just monitor that, right? So what does that look like? Now, ideally, I'd use a 5-minute time frame for this. I know a lot of you guys don't go that low, but quite simply, I mean, you can even tell, just look at the wicks. We've dipped into this. We've got a bullish reaction here. We're inside our New York trading session. Yeah, we'd be around about New York PM session here. Price comes up, sets this high, right? So price sets this high. Yeah, so high, higher low, now a higher high. So we've now got bullish market structure on a lower time frame. Yeah, so here we can then look to trade higher up. What would I use for this, and what I really like using for crypto is the breaker entry. Yeah, like I said, I typically do this on a 5-minute chart, but if I'm looking for a breaker, I'm looking for the last up candle before the purge on liquidity. Yeah, so this up candle. For me, I do these in orange. And my theory is really simply this. I look for the swing low before, which is the one that was set here. Price broke out, closed above, so my long position goes on the top of the breaker, which would have been triggered here. This candle, let me just zoom in for you a second. This candle here is the one that closed above, yeah? This little one here. So we then set our limit order on the top of the breaker, and price comes back in. Jay Khan, welcome, buddy. I'm very good, thank you, my friend. Hope you are too. Setting the stop loss below this swing low, right? And then remember what I said before, we're looking for where the clear and obvious liquidity would be resting. I have a tendency to look to the bodies quite often on these, right? But typically we are looking for the wicks in case we get front run. So we can see the nice trade setup that we got here. Yeah, because we got that reaction as price came down into here, right? That's what we're looking for in that respect, okay? So now when we go back to the 4 hour, and this is going to apply the same to all the charts, guys, right? So I'm just going to get rid of the session breaks because now we're not focused on execution, right? We're just going to keep this on the slightly higher time frames and look for our bias. So we're still bullish, right? We can also notice we're still holding this fair value gap here. So what are we looking for? We're now looking for price to respect bullish fair value gaps, right? So same thing again. What do we have here? We have a sweep of a low. Price then has a bullish reaction here. We can see it's holding this high time frame fair value gap, right? Then we're looking for an FVG in here, which we have our 15-minute one. And as we can see here, we're currently getting a bullish reaction, right? Price has gone up, dipped back down into this, held the fair value gap. So this is where we can start looking for long setups. Okay. So for right now, in terms of this, higher time frames telling me that this still looks bullish. I know market structure on the lower time frames or on the 4 hour here isn't. But if our expectation is for this high to be taken and you want a little bit of extra security, then you can always say to yourself, right, well, depending on how this candle closes here, but really we want this high taken out. If we get a close above this higher, we would look for displacement in this move higher, meaning a fair value gap. So say we have this nice impulse move higher, leaving displacement, it leaves a fair value gap in here, comes up to here, I would target that here. I'd then be probably taking partials here, this clean high in case we reject early, ultimately targeting the liquidity from the higher time frame above. All right. So I hope that's been helpful for Doge, guys. Now we're going to really start ripping through some of these as well. So if we get through the original batch, guys, I will then really start drilling in some of the extras we've got on here. All right. This isn't going to be crazy zoomed out to like weekly, monthly. Going to focus on the daily down to the 4 hour, just really kind of look at ascertaining some bias and then looking at how we can make those plays. And what I'll do is a nice thread for everyone that I'll put out on Twitter, so it's free for everyone to look at how I would then look to take execution patterns. Okay. So we had that, the king of the alts. Let's take a quick look at Ethereum. Just wait a few seconds. Literally right in the heart of London here, two separate business fibre optic lines coming in, and still trading view is being a little bit stuttery. We can actually see here, right, fair value gap daily. What were we looking for? Inverse of this 4 hour fair value gap. We got it here. Just if we were to extend that across, yeah, inverse, holding, bullish, bullish. That's how we're developing that, right? But I don't want to use, we had the same thing here, bullish fair value gap, held it there, blitzed through it there, retested it here, sold off. Let's just hide all of these for a second. Oh, you're very welcome, James. Very, very welcome. Hope it's useful for you guys. Right, so we're going to try and rip through as quickly as TradingView will allow us anyway. We're going to look at daily, then we're going to look through there. So you just want to take a little bit of a zoomed out view, right? Because you want to know where the key liquidity is resting. Now, what we can see here on ETH straight away is that we've run this high, yeah? Which is fine. Doesn't mean that the whole world's going to collapse there and that we're going to start, coming backwards from there. But what it does mean is, let's just take a very quick look at this. It does mean that, we can expect some kind of reaction there. And actually, if we got a really strong close above this, we could then monitor the lower timeframes and look for liquidity targets higher. We can see we ran into it. The wicks tell you all you need to know. We ran that liquidity along with the prior day's high. But remember, like I said, right, see how it stopped just short of this target, this high time frame target, yeah? And then people start to get short here. Well, no, it then pops back above to wipe those people out that are early and then has the corrective move. So here's our daily inverse fair value gap, right? So that's what we've got. Price came down to here. We saw a rejection in here, yeah? Price failed to hold this bullish fair value gap, yeah, which we had at the time here. Ultimately, again, itself turned into a bearish fair value gap here. But that was, at the time, bullish, right? So closed there. We got the dip into there. Long setups favoured. Where? To that high. We got that. Price then came to revisit it again. Yeah, we got this reaction here. We might not have got a long setup, or we might have got stopped out here expecting continuation. However, when we ripped back below it, what did we get? We then inverse. We get this fair value gap inverted, but then this bearish fair value gap. Price drives in, short trade, where to? Prior day's low. Yeah? Then we get our inside day. We ultimately have this really strong breakout here. Yeah. So that's now an inverse fair value gap. When price returns to this, we expect bullish reaction in line with our high time frame bias, which we can see that we got there. So let's take a look now on our 4 hour and see if we've got anything starting to correlate with that, which I think we have. Yeah. No. Do you know what? I was going to talk about doing doing counter trend trades, right? But actually, I won't. I'm going to leave that because I want to focus on the other alts for now. But I will in future sessions take a look at that. Ricky, you're very welcome, mate. Always, thank you always for joining the stream. So what have we got here? We can see prices come down, right? We see we got a nice reaction here. Now, I would have preferred this low to run that. I have to be honest here, right? Now, we have got, on the close of this 4-hour candle, we've got our first bullish FVG, yeah? So now I am just very cheekily and quickly going to break down to a time frame that I would look to trade here. Now, it's outside of my trading session here, but what we would want to see in the New York session is like we got at the end of London here. We've got a sweep on the lows here, or actually a local sweep here, yeah? Then, I love this for sort of a bit more of a confirmation, is we then close above this bearish fair value gap, right? What does that do? It becomes an inverse fair value gap, which we expect to support price. So now, with this holding, as we move into New York, what I'd like to see here for continuation higher, a nice breakout taking us into our nice little 130 session, leaving an inefficiency in here, price to return to that before we then target prices higher up. All right, now I know that's a very low time frame there, guys. Take a quick look at the hourly for you as well. But this is my current thinking, right? Because we've also got this local clean high here. So if we start holding this, we've held this bullish fair value gap here, right? We're now in this inverse one here, and then we can look for price to kind of move higher. So you see how we're looking at the higher time frame view, breaking it down onto the lower time frame. I do really factor the dollar into this as well. We're starting to see a little bit of a pullback on the dollar at the moment, and while there's not currently a direct correlation between them, right, then it's still kind of indicative of what we're looking at on risk markets, right? So if we move to the dollar over here, I know this is on a lower time frame, but again, we notice that we've just kind of taken out this high here. Price is starting to pull back. However, we would want to monitor this, or I certainly want to monitor this on a higher time frame. Yeah, and if we see price start to climb back in here, the moment that we lose this area, we start to break down. I'm on the H4 looking for a fair value gap, bearish one, to retest. And then when that really starts to go lower, I think we see some good moves on risk assets, all right? So just to factor that in. So that's where we are on ETH. Doge done, ETH done. Let's have a very quick look at DOT as well. Guys, hopefully this isn't going too quick for you, or if it is, please do let me know. I just like to get as much coverage to everyone as possible on these. So I figured that kind of doing a little bit of a kind of breakdown of how I would look at this first of all, and then follow that up with just more kind of execution and areas that we can all go away and look at and say, okay, let's look at how price reacts here. Right, let's see what DOT's got in store for us, shall we? Wait for TradingView to catch up. I don't know why it's taking so long on DOT today. Craigie boy! Awesome. I hope you have a good day at work, mate. You're very welcome. I'll catch you soon. To be fair, I've got about 6 charts open at the moment, so maybe that's... There we go. Perfect speed. Great. Thanks, guys. Appreciate it a lot. So let's just hide all of this. There we go. So a lot of these, I think, are going to look fairly similar, right, with the alts. But what we can see here is we've had this level run. We didn't actually have a daily inefficiency or a daily fair value gap, to drive back down to in here. So just looking at this in terms of context, right, so we see we took out this really key low down here. We can see what happened. Low, set this high, break out above this high. What happened? Price then came back towards a fair value gap in here. We've then got expansion higher. We've then run this high and kind of pulled back here. So a real kind of point of interest here is this order block. Order blocks can be a little bit trickier, right? Because they have depth to them as well. I've been focusing a lot more on the bodies recently, which is much more of how I kind of approach traditional markets. And I had a really good conversation with a friend of mine who's an exceptional ICT trader as well. We were looking back over sort of old teachings and really looking at how to allow for order blocks on higher time frames, because otherwise you just have these huge areas, right, that you're factoring in. So taking it from the body here, we can see we had this initial reaction, showed a bit of strength. We've then kind of come deeper into this. We have kind of poked out the bottom of this, but then there's an argument you're kind of going into this block here. But that's kind of our point of reference there at the moment. But there's no doubt that we're currently holding that, right? I know we're under that line at the moment, but so it doesn't really confuse people. What I'd be looking at more as the actual block itself is this. So a little bit like fair value gaps, as long as we're kind of holding this, yeah, you don't want to see any closes below. So there is an expectation that we could see higher prices here, but we don't have to guess, right? What we can say to ourselves here is, okay, well, let's give ourselves something to work on. I think if we start closing underneath this and we start losing structure, then we can look for kind of a retest of this area and lower prices. This kind of concerns me a little bit because we've got equal lows down here, or relative equal lows, right? Meaning that there's liquidity resting there. Price loves to hunt that down. So yeah, we've taken the liquidity from the highs, now hunting liquidity at the lows. That cluster of lows there, and actually quite some equal lows across here as well, right? See how price dipped into that and we got that bullish reaction. Now, actually, price has been moving very efficiently here on DOT, meaning that it's not giving us a ton of fair value gaps and bits and pieces to work with, right? In fact, the one that really stands out to me here, which would have been great when we were looking for short setups into this, if we were counter trading it, is that one. Again, broke down, price rebalanced this, broke down again. We've now got another one sat above it here. Right, and these become relevant when price drives back into them. However, what I'd be more interested in seeing here is something like this, right? If we can get price to come up into here, maybe we find an initial rejection off of this, but we want to see a bullish fair value gap left in here, right? And then I think we would then start to look at it short-term plays like this, right? We've got equal highs pretty much resting above here, yeah? So that's what we would look to target. You've got these fair value gaps here, but remember, this is dependent on us coming up here, leaving a fair value gap in here, bullish fair value gap that we can now target and then move up. And then in an ideal world, what we would see, slightly deeper retracement on this one here, is something like this. Price get an initial rejection here, no problem. We hold our high time frame bullish bias because we're holding the high time frame bullish order block. And then we could look for this to then become an inverse fair value gap, which we were discussing before, and then look for longs off of that. But for the moment here, for me with DOT, actually, unlike some of the others, this doesn't really have an immediately actionable setup. Yeah, Erica, do you know what? It might be as well. I got two different fiber optic lines running in, both an eye melting cost for super fiber on both. The idea is one drops out, the other one kicks back in, but we have had City Fibre do a big installation around here recently and things haven't quite been right. So I might need to get the engineers out to retweak it because certainly nothing I ever used to have an issue with. But I have had a few issues with TradingView recently because they've been doing some updates, not to knock them back because it does. They're really, really good, obviously, but I don't know if it's them or if it's me. But if no one else is having problems, then it probably is me, isn't it? Right, so what was the next one? Copper. What's the ticker for copper, guys? Just someone ping what the ticker for copper is. And what we'll do is we'll just cover coin, first of all, while we're waiting for the ticker for copper to come up. Here we go. Nice, HG and EG. Right. Well, we'll try both of them. I know Libsy, who's a fantastic trader, used to use copper as a really good kind of counter trading element for crypto. Right. So yeah, I mean, wow, we can see pre-market there. Let's have a look. It's just been on some unbelievable rip, hasn't it? Just had the absolute knackers ripped out of it. So I'm going to move to a weekly chart here, and the reason for that, guys, is I do always do the weekly chart analysis anyway, but we weren't actually near any kind of weekly levels on those, right? So that was the key reason for that. So if we don't see any clear daily levels, then we can see. is that a suggestion? Pisket, just type in copper. It's probably a good one, actually, to be fair. So I like to do the weekly lines a little bit thicker so they kind of stand out on the chart. Now on a weekly scale, we can see here that this has just been on the ultimate kind of bullish rip. However, it's never without structure, right? Very simply, let's take a look back at what we look at. It is. No, sorry, mate. I wasn't taking the piss, honestly. It just struck me as a really simple thing that I obviously should have looked at. But sometimes I try and do it on the stream and look for what it is when it seems really obvious and it all goes wrong, and then I end up flailing around for a while. But no, I absolutely appreciate you putting that on one there for me, mate. So what do we have here? Price sweeps are low. We have a shift in market structure here, right? And then price takes out this high, which is ultimately our market structure break. Yeah. So then when we have the break-in market structure here, we can see what do we have? We always look for the inefficiency, right? We're always looking for that fair value gap because there's an expectation for us that price is going to rebalance them at some point. We don't know when, but we do know that more often than not, they're revisited, right? So then when price, in this very high time frame, obviously, we've left this resting liquidity, this resting liquidity, this resting liquidity, this resting liquidity. Price drops into this, yeah. We had this big reaction over. Remember I said about my recent love for inverse fair value gaps? We see that there. So on a weekly scale, this really gave us an indication that this was showing a lot of strength, right? I'm not sure what I've done, mate, but you are always welcome. So now, if we're looking at the same premise on the daily scale, we're saying, okay, well, if this is our target, this is where we're really expecting price to run to, yeah? Then where do we want the run to happen from? Here, really, right? Why do we want the run to happen from here? Quite simply, because we can see here we've got this inefficiency, we've got this bullish fair value, bullish order block here as well, sorry. So now we're still expecting bullish price action, right? We want to see price hold. So what we can do here as well is now refine this fair value gap onto our 4 hour. And we can now see that we're holding that fair value gap. So as long as we're holding this here, then we're going to look for higher prices. Something we could do for a bit of extra confirmation here is target this volume imbalance, right? That's because we can see that here, slightly different to a fair value gap. I won't go over that in too much detail now, but we'll happily do so in another stream. Yeah, so let's just do that in yellow for argument. No, you can't see that, can you? Do it in teal. Nice cheeky teal colour. So a little bit of extra confirmation as we move on to the lower time frames. It's going to be price having the bullish reaction from the fair value gap below, closing above this, looking for a retest of this, and ultimately looking for price to then take out that high. All right, so that's what I'd be looking at. And also, you've got this kind of flag happening here as well. So as price starts to compress within that, we see a breakout of that, retest of it, ping up to the moon. That's actually really quite nice and clean, that chart. I like that. I know we're very overextended here, but that's what I'd be looking for here because I still think that the ultimate liquidity up here has been tapped. If we break down below this FVG, I know we're still holding the daily, but I'd then be looking for this order block here to hold. Might consider some short-term scalps into kind of the lower fair value gap as well. How do I handle the gaps between candles? Yeah, really good question. So it's a volume imbalance and basically treat it exactly the same as a fair value gap. Yeah. So you see there's no body coverage here. You've just got this gap with the overlaying wicks. Draw that out and we can treat that exactly the same as we would a fair value gap. Yeah. So at the moment, it's providing a little bit of resistance. Yeah. If we continue to break down from here, then it's doing its job as resistance. However, if we flip this to support, we look for a retest of that area and then price to move up higher. All right, guys. And then we're going to close off. What have we got? Copper. And then we'll be a few minutes over, but actually I think we've done pretty well. There he is. Absolutely spot on. Pisket. Absolutely spot on. So I don't know what you guys are trading or if we're looking at it. We'll just look at the CFD. Yeah. On capital.com. And like I said, I don't really trade this. I'd normally look But no, capital should be good for that. I used to trade on Pepperstone actually in the UK. Here we go. Start on the weekly on copper as well, right? Sometimes your traditional market assets, stocks, forex indices, it pays to kind of start it on a higher time frame, just because we simply have tons and tons more days. You're welcome, Erica. Yeah, take a look at it. Go back in your charts, find those volume imbalances, and then you can see how they have that kind of effect. Something you see considerably more on traditional market assets than you do with crypto. So, weekly scale, where are we? See if we're holding this. Inverse FVG. A little bit ropey this one, because we've kind of had a little close out the bottom. We've kind of come back over it again as well. So I certainly not something I would be hanging my hat on. So let's actually get rid of that for a moment and let's look at these, right? So this daily fair value gap here, we've lost this now, or we're in the process of losing it. So we haven't lost it yet, but if we do, we would then change that from grey to purple. We'll know in just under 9 hours if we've got that. So if you're a high time frame trader, and then the next thing that I would want to see hold here is what we're currently digging into, which is this order block. Yeah, so on the daily scale, we've got that. Did we run this high? We didn't run this higher. I have to say I would have some kind of expectation here that we'd be looking to target this high. Price kind of came up into it. Again, our first indication here of lower prices was when we inverted this fair value gap, when we closed below it here. So we'd be looking for lower prices here down. Ultimately, there's another fair value gap completely below. Yeah, exactly. So that's a really good point there. Arms as well. Yeah. But you're always looking for the yearly open. You can do that to go on your 12-month. You can hover over the candles as well. Just wait for it to load a second. And then you can look at the open, right? So open's 4.4570. You then find that on your chart, right? So 4.4570. So that's what I've got there, Hans, for the open. So yeah, price lost that, came back really close to it here, right? And then has sold off. So that could be a sign of weakness. Again, if you're a real high time frame trader, you can always take a look at this as currently offering support. But what happened here, we'd run these highs, price came back down, but did find support here. So maybe we are looking to push up a little bit higher. Now, as we drive down to the 4-hour chart, right, and we can see here that we've driven into this order block, right? So this is our daily one, remember? So we're now down on a 4-hour. This was the 4-hour fair value gap we would be looking to hold price, right? So as we lost this and price came into this, we can see we've had pretty weak reactions here. Yeah, pretty weak reactions. Now we're obviously coming into this order block. So now what we would be looking to do, what I would be looking to do, is get down to a lower time frame than this and see that really nice reaction there on the 15-minute. I would still want to see that flipped. We've had a close above it. So our M15 order block, fair value gap, has now been inverted. And probably a little bit late to the party on this one, although it would still be very early to take it. When we closed above that here, we set this fair value gap, right, which is what we're dipping into now. We can see we're getting this nice bullish reaction at the moment. Probably go on a slightly lower time frame than this if you were looking to trade it aggressively. But what you'd be looking for here is the close above, price to dip back down into here. You might even, in fact, need to go on a much lower time frame. I know a lot of you guys are that. Whack, very welcome, mate. I hope you have a great day. I know we tweaked over by a few minutes. I actually need to run in a second as well. I've got some other commitments today. So we can see that here, right? We're just getting that bullish reaction. Price is starting to come up. We're holding the 2-minute order blocks here. We broke structure, obviously, a fair while ago, but we needed that impulse move above here. Price has dipped back down into here, as we said, and now it's finding the legs to go a little bit higher. So we would monitor these clean highs above here. I know that's a really low time frame chart, guys. I'm not suggesting you chase it on charts like that, but just to give you an example of what we were looking for. So I'm really, really sorry if we didn't get around to everybody's today. I know we had some really brilliant suggestions up there earlier, and we had a load of people on the stream. Unfortunately, well, I do like to try and keep these below an hour. I'm a few minutes over today, but hopefully we got a lot covered off. With things like this, keep an eye on DXY today. We're seeing a reasonable pullback on that at the moment, but that can easily change. And yeah, trade safe. Have a look at the levels. If you've got any questions from today's live stream, please don't hesitate to just pop them over to me. You can join the Nest for free just by using the sign up link and come and join us for 7 days. Or you can also just pop along and get a free month access to our calls, for example, with our partner Bybit. And we've also got some really, really cool other things going on at the moment. Some really exciting things that I can't quite tell you about at the moment. And I wish that I could, but will be available soon. So with that in mind, I'd like to wish you all a fantastic week and an amazing weekend ahead together. You can always reach out to me on Twitter as well, guys, BC_Richfield, if you've got any questions. Have a great week, and I hope to catch you all around the Nest, and I'll see you again live on Monday. Take care, everyone.
BitShop, the first fully privatized on-chain auction house, introducing new ways to generate liquidity for Web3 assets, backed by KuCoin Labs and Republic Capital. Bid small, win big at BitShop.io.